Hey, what's up, guys? I am about to show you a pretty exciting setup here on KAS, Kaspa, and I'm not going to go into fundamentals at all, actually. This is a purely technical analysis setup that I identified. This thing looks like it's ready to explode. So there is a guy named Mark Minervini who is one of the legends of trading, but he's a stock guy and he developed this pattern. So what is the volatility contraction pattern? Well, first you got one, you need a strong uptrend with high demand depicted here. And then two, you need price and volume to contract from left to right as depicted here. You see price coiling up basically, right? It starts wide and it starts to narrow, narrow, narrow until explode, right? Higher lows from here, there's your low, higher low, higher low, higher low, and buy at breakout. Now, this is the part that I don't necessarily agree with. You do you, you figure out which way works best for you. But now let's compare what we've got here. Price coiling up, higher low, higher low, higher low, higher low. So then let's go back to KAS. So here we go. Strong uptrend, and then we have our low, higher low, higher low, higher low, higher low, higher low. So what does this mean? If you think about it from a market participant and psychology point of view, what does this mean? Starting from down here, there was a lot of demand that brought price up, and as soon as it came down, it couldn't get any further than here. It got bought up again. Price went up all the way up to here. But then there was a big sell-off, and then it came down all the way down to here, and this was like a fake out because look, it didn't even last a day. This is a long wick indicating demand. So the demand is so strong that price literally cannot get to the levels that they were before, right? The demand is so high that it just cannot get any lower than these levels. Look again what happened down here. Boom. However, this resistance indicates that there is also accumulation. So whales are buying, and then when the price gets up, they're like, no, no, not yet. And they sell off, and then they shake out the weak hands and buy some more, and then they sell off, and then shake out again. And so now it's like there's not much further that this thing can go, right? It's got to make a decision very soon. And here's what's interesting. So if I'm going to turn on one of my indicators, this is Lux Algo, and it did fire off a signal on the daily. So it's been in an uptrend ever since the 1st of May and has maintained that the whole time, right? And if you look over here, you can see this thing that says squeeze, which companies my thesis that there is a volatility squeeze here. Price is tightening up so much and volume has dropped right off and price is coiling up, and this looks to me like it's about to explode. Now here's another cool thing I want you to see. So have a look at these fair value gaps, and you can see how they generally get revisited. Not every one of them, but after price pumps, they come back down. Now, will this come back down? Because I'm thinking that this will make a beautiful sniper entry right there, right? I like this because you have a very low risk and extremely high reward. Now, I know that most people would say you should wait for price to break out and then retest, and that would be your entry, which is fine. However, I think that seeing as how this has been acting as upward support, I would rather get a sniper entry down here, and I find this actually safer. Because if you entered up here, you'd have to be prepared for it to come down, right? And potentially as low as here, or you might need like a 15% stop loss just in case of, look at these wicks, right? These are liquidation and stop hunts. So if you were to enter here, you could probably expect price to potentially manipulate all the way down to here, but have your stop loss about a 10% stop loss. And then in terms of your take profits, here's where it comes into a little bit of moon math. I'll take it from the high to the low, and I'll put on my moon math template. And here's where I would suggest you take some profits. Now, the measured move of a VCP would be something like so. This is also an ascending triangle. This could be one version of your initial TP. So that would be a nice move right there. You know, you could potentially go with slightly larger size and you have your nice safe 10% downside stop loss, and it's about a 55% upside according to this measurement, right? So that would be a 5-to-1 risk to reward ratio, which is already a great trade. However, there's so much hype with Kaspa. I can see this thing going even way further than this. You know, this is only like a whatever 2-3x from here, but I mean, in the hype of the bull run, I could see this thing continuing to do very strong. I hope you enjoyed that. This is the VCP volume contraction pattern that we reviewed, made famous by Mark Minervini, one of the most famous traders of all time, actually. He's written a few books and I've read them. He's great. This is more of a stocks setup, but when you just think about the psychology and what's going on in the price, and the fact that demand is so high that it cannot drop any further and it's coiling up. It doesn't matter what the asset is. It's crypto, it's stocks, it's gold, it's whatever, right? And so, yeah, I hope you enjoy my setup. Good luck.